The U.S. dollar initially moved lower after the U.S. CPI data was released this morning, which showed that the headline and the core measure both rose by the expected amounts of 0.2% and 0.3% respectively. The headline or the year-on-year for the core was a little bit higher, 3.1%. That may have been because the month-on-month was above the 0.3%, the unrounded number around 0.32%. So it ticked it up to 3.1% from with the expectations of 3.0%. Nevertheless, the US dollar did move lower initially, but we are seeing a rebound back to the upside. I'll go through the technicals that are driving some of the major currency pairs in this video. So let's get started. Looking at the euro versus US dollar on the hourly chart, the price did move above the 100-hour moving average, but we did run into this trend line up through here and short of the 61.8% retracement. And the price has since rotated back to the downside. And the second look at the data on the downside, we do have the 50% retracement of the move down from the July high to the low on August 1st. That 50% comes in at 1.01609. If we break below that level, we did earlier today, that would be a disappointment, especially given the move above the 100-hour moving average here. And we'd have the price moving back down toward the 200-hour moving average. And if we break below that level, that would be more bearish for the euro versus US dollar. Right now, we're back in neutral territory with the price above the 50%, below the 100-hour moving average, but above the 200-hour moving average. Let's take a look at the dollar versus yen next. And we'll focus initially here on the 4-hour chart. The price moved lower, but we did test that 100-bar moving average on the 4-hour chart. That's the blue line right here. Recall that it was resistance all in last week's trading right here and here before breaking to the upside and trading yesterday. So coming back down toward that level at 147.82 and finding support buyers is good news for the buyers. At least they stay in the game. We are still well off the high price that we saw earlier today and off this swing area up here between 148.64 and 148.77. But this is going to be the risk-defining level, the bias-defining level for the dollar versus yen. Watch it at 147.82. Let's take a look at the sterling versus US dollar next. I'll focus on the hourly chart. The price made a break to the upside after the report, moving above this swing area, also above the 50% retracement. The past few days I've seen the price trying to move above that 50% retracement level, but only find willing sellers after a short period of time. So getting back below the 50% or moving back above that 50% retracement is more bullish. We have to see if the level does hold now going forward. We are currently trading at 1.3476. The 50% comes in at 1.3463. That's going to be the key bias level for this currency pair. The dollar versus Swiss franc. Looking at the hourly chart, the price came down, tested the 100 and 200-hour moving averages, found support buyers against that level, pushed back to the upside, so the buyers remain in play off of the initial move. On the top side, I'm going to be looking toward this swing high right here, and the swing highs from earlier today as the next as a level that we need to get to and through. Those levels come in at 0.81169. We had, again, a high price right here, high price right here, high price here, high price here. We did move above in trading yesterday, but they fell below back in trading here today. We'll take a look at the dollar versus Canada next. We'll focus on the hourly chart, and you can see the price moved above the 100-day moving average and the 200-hour moving average in trading yesterday, but fell back off into the close. In trading here today, we tried it again to move to the upside, falling back below the level once again off the CPI, and now we're trying to move back above it. So if I were to characterize this chart, it's misbehaving above and below the 100-day moving average and the 200-hour moving average. It should decide which way it wants to go, either up or to the downside, but the data has gotten in the way. Nevertheless, if we can stay above these levels right now after failing on the break back below it, it may be the catalyst that is needed to push this pair back to the upside. Of course, we still have issues with Canada and the U.S. From a trade standpoint. So, does that slow the economy down? Does it lead to a lower Canadian dollar going forward? we'll see. But technically, we got to focus on the 200-hour moving average and the 100-day moving average, despite the ups and downs in trading in that currency pair. Finally, let's take a look at the Aussie versus the US dollar. Recall the Reserve Bank of Australia did cut rates by 25 basis points, and that's pushed the Aussie versus US dollar to the downside. Let's put it on the hourly chart, see what that says. If we look at the hourly chart, the 100 and 200-hour moving averages, the price did move below the 200-hour moving average and rebounded back to the upside here, but holding below the 100-hour moving average. So if we can continue to hold this resistance right here against a 100-hour moving average, then we'll give the sellers the benefit of the doubt, especially after the RBA rate cut. But they need to get and stay below 200-hour moving average. This first attempt to break below that level just didn't do it for me, and probably for a lot of traders as well. So we need to get below that 0.6486 level and stay below that level to keep the selling pressure and the sellers more in control. So there you have it. A look at a lot of the major currency pairs after the US CPI data. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.